ahead with the questions, try them out. Good morning everyone, welcome to Office Adda 24/7. My name is Niharika Walia Bhatnagar and I am with you with the area of accounting and financial management. And as you know, the days are counted. The examination is going to be starting from the first week of October. So you have counted days left. So what is it that you are looking forward to? So are you preparing well? If you are preparing well, then I am taking up the classes there. Go ahead with the questions, try them out so that you have a clarity about what we are exactly dealing with and how you can cover up all these topics. So let's go ahead and check it out. Okay, here comes the first question, everyone. The double column cash book records only the cash transactions, all the transactions, cash and bank, or cash purchases and cash sales transactions. I hope you have reviewed the particular session that I've taken yesterday. There were plenty of questions that I've covered regarding module A there, so you can look forward to it. Now, let's talk about this topic. I've talked about it in the previous class as well. That's why I'm looking forward to it. So if you haven't reviewed it yet, you should go ahead and review it, because then there are more questions, more practice, and more basics. Okay, let's look at this in terms of a double column cash book. What do we do? The double column cash book looks like this. They have a cash column and bank. Then we have this cash column and bank. Now this is the debit side and this is the credit side. This is called the receipt side and this is called the payment side. Okay, so in this case, when we talk about double column is normally cash and bank transactions. So in this case we have only cash transactions. No, double means two na, so why would we have only two there? Why would we have only the cash column? Then all transactions? No. Double column cash book records only the movement of cash as well as its brother, the sibling there, that is bank. Then cash and bank transactions and cash purchase and cash sales. Cash purchase and cash sales is single column cash book. This is single column cash book, while this one is double column cash book, right? So it is double column cash book records all transactions related to the bank as well as cash, right? So let's look at the next question then. Okay, here comes the next question. Errors of commission do not permit. Acha, what do you mean by errors of commission, everyone? When we talk about errors of commission can be related to these are kind of clerical errors. For example, I was supposed to write it in the account of Mr. Sham. I have taken it in the name of Mr. Sham. I was supposed to take 2 zeros, I've made 3 zeros. So in this case, the wrong account can be taken, right? So in this case, what's gonna happen? It is incorrect totaling of the trial balance, incorrect totaling of the balance sheet, trial balance to agree, or none of the above. When we have errors of commission, now you will find that most of the errors of commission will impact your trial balance, and it will make it like that the trial balance will not agree. Okay, errors of commission do not permit the trial balance to agree. That's an exceptional point related to it, that it does not allow it to agree. So the cash book, in terms of errors of commission, normally your trial balance will either have more debit or more credit. And when you have such a situation, what will happen? You will create a suspense account. Right? Now comes all of the following have debit balances except wages account, trade receivables, bills payable, or goodwill. Okay, do you know when we talk about the balances there, it is basically taken in such a way that there are certain things, they have a certain nature. Let's look at that. If you would have seen the term cradle, C for capital, R for revenue, A for asset, D for drawings, L for liabilities, E for expenses. What are we dealing with this and how are we dealing with this? Capital will always have a credit balance. Basically, among these, LRC went to the team credit. So, whenever your liabilities are to be taken, your revenue is to be considered, as well as your capital is to be considered. These three will always have a credit balance, while the opposites, that is assets, will have debit balance. Drawings will have debit balance. Expenses will have debit balance. So that means if I look at the aid, that is debit side, it has got A, D and E, right? So wages account is an expense, so it has a debit balance. Trade receivable account, it has an asset, so debit balance. Goodwill is an account, it is a debit balance. So the correct answer is bills payable account, which is a liability having a credit balance. Done. I hope this entire portion is visible. If it is not, then I hope this would be visible now. If you're noting down, then kindly note it down in this manner. It will be really helpful if you remember the nature of these basic 6 pillars of accounting. Wages, trade receivables, goodwill have all debit balances. Bill receivable has a credit balance. So in this case, the correct answer is bills payable. It is something which is a liability. We are supposed to pay to someone, na? So it's a liability for us. Done. So let's look at the next question now. The term depletion is used for fixed assets, natural resources, intangible assets, or none of the above. Okay, depletion is a term. There are 2-3 terms. One is depreciation, one is amortization, and one is depreciation, amortization, and last is depletion. Fixed assets depreciates. All the tangibles, they depreciate. The intangibles, they amortize. All the natural resources, they deplete. For example, mines. For example, a gold mine, once it is cleared up, a coal mine, then fuel. If you're taking from the oil wells, if you're taking out the fuel, then those particular oil wells are depleting, na? Because natural resources, once reduced, will take millions of years to regenerate. So in this case, depletion is exclusively used for the natural resources. Depletion is used for natural resources. Here comes the next question. Bills of exchange, when drawn, requires. What does a bills of exchange require, everyone? A bills of exchange would require noting down. Yeah, we get it done from the notary there. The next point is bills of exchange requires discounting. Not really. This is not compulsory. Even noting is not compulsory. Acceptance or none of the above. See, when you draw the bill, if I issue you a bill and I say that I order to pay you, that you will pay me this much amount of money after a certain period of time, right? If I say 10,000 rupees after 3 months. So basically, I am drawing a bill on you. Till the time you don't agree upon the bill, how will I get the money from you? Can I? No, I can't. So in this case, one problem would be that if bills of exchange when drawn requires acceptance. Till the time you don't accept the bill as per the Negotiable Instrument Act, then the particular thing will not work out. So in this case, a bills of exchange when drawn should be accepted first. And if in case as a dishonor, then it has to go with the noting as well. It should be duly stamped. And when we talk about discounting, discounting can be said as something where we get it discounted, means we are asking them to discount, is like selling it to the bank. A bill of exchange requires acceptance. According to the provisions of Reserve Bank of India, a promissory note cannot be made to bank, endorser, bearer, or none of the above. There is one single rule. With in case of a promissory note, it's good we issue that there's a promissory note. Promissory note is that I promise you to pay a certain amount of money after a certain period of time. That is what we call it as a promissory note. But under promissory note, there is one thing: it should not be issued to a bearer. That means whosoever is holding it will have to give the money to that particular person. No, that's not the case. It should not be given to the bearer or the holder of the bill. Okay? So the correct answer is bearer. A promissory note cannot be made payable to the bearer. Okay, here comes the next question. Let's have a look. What does the question say? Sold goods for cash. On the list price of 8,000, 10% trade discount, 3% cash discount. Posting will be made in account. 216 on the debit side, 216 on the credit side, 240 on the debit side, or 240 on the credit side. Sold goods for cash on the list price of 8,000 rupees. See, the point is the list price is of 8,000. From that, the TD was of 10%, that is rupees 800. That means it makes 70,200, and the cash discount is of 3%. Now 3% is of what? 3% isn't of 800 or 8,000, it is of 7,200. And when we are giving discount to someone, what are we going to do? We are giving discount now. It's an expense for us. If it's an expense for us, how do we record it? We will record it as 216 on the debit side. Okay? The answer is 216 on the debit side. The trial balance of Meghna shows the opening inventory of 10,000, which will be debited to the trading account, credited to the trading account, deducted from the closing inventory, added to the closing inventory in the balance sheet. What are we going to do about it? Okay, I hope the question is visible. In case it's not, let's look at this. The trial balance of Meghna shows the opening inventory. Opening inventory means opening raw material, opening finished goods, whatever the case may be. Right? It is debited to the trading account, credited to the trading account, deducted from closing inventory in the balance sheet, or added to the closing inventory. The trial balance of Meghna shows the opening inventory of 10,000 will be debited to the trading account. How does a trading account look like? Let's talk about that as well. In the trading account, that's how it looks like. We'll write trading account. This is to opening stock, buy closing stock. This is buy sales, to purchases, to direct expenses, and then we have the to gross profit, or if there's a loss, it would come here as gross loss. So the opening stock is shown on this side and the closing stock is shown on this side. Done? Now let's look at the next question. If a machinery is purchased for rupees 1 lakhs and the asset would be recorded in the books at 1 lakh, even if its market value at the time of it happens to be 1 lakh 40. In case a year after the market value of this asset comes down to rupees 90,000, it will ordinarily continue at 1 lakh, not rupees 90,000 due to. See, we got a particular machinery. The value we noted it at is 1 lakh because we bought it for 1 lakh. The market value of it can be 1 lakh 40, 1 lakh 50, whatever the case may be, but I paid rupees 1 lakh. Right? I recorded it at 1 lakh because of cost concept. Now the point is that the market value of the thing is coming down. What should we do? Shall we record it at the same price, or we should record it at a price which is lower than that? See, the fluctuations are gonna come. Till the time I'm not selling off that particular thing, why should I revalue it? Think about it. You drive your car every day, but do you record the value of your car every day? No. You're not gonna use the car every single day now, isn't it? Done? Now let's look at the next question. It is the realization concept, present value, replacement, or cost. The correct answer is cost. Because if I have a car, I do not revalue it every single day. I'll revalue it the day I'm actually selling it. If I'm not selling it, I'm not going to revalue it time and again. It's of no use. So in this case, the cost concept has been followed. In this case, we'll record things at the cost. The the amount of calls in arrears is deducted from dash to arrive at issued capital, called up capital, issued capital, paid up capital, called up, and paid up. The amount of calls in arrears is deducted from. See, if the particular person we are asking them to pay and they haven't paid up yet, right? So in this case, what will happen? We first of all call people for money. We call them that everybody please go ahead and pay. If they do not pay, that would be deducted as calls in arrears. Okay? To arrive at, where are we arriving at? We are getting it at the actual amount that is paid up by the people. Because if I call 10 rupees and people have it paid 8, but 2 rupees are still left, so I need to know what is the paid up capital, right? So in this case, the correct answer would be calls in arrears is deducted from the called up capital to arrive at paid up. Done? Which of the following is correct entry to record cash purchases of rupees 3,000 from Amar? Debit purchases account, credit account, Amar and purchases, cash and purchases and cash. Which of the following is the correct entry to record cash purchase? We are recording a cash purchase now. So it's gonna be cash purchase now. So it doesn't matter to whom I'm making the payment. The most important thing is I got goods and I lost cash. So purchases account debited is of rupees 3,000. I got goods worth rupees 3,000 there and I made a purchase. So in this case, the journal entry will not have Amar, because in this case Amar is not relevant. The relevant part is cash. It's gonna be purchases to cash. Done? That's it for the day, everyone. I'll be meeting you in the next class. If this class was helpful for you, then kindly let us know about your particular there. Share this session with your peer groups and let me know if it is helpful for you. Don't forget to subscribe our channel, and at the same time, if you haven't started your preparation yet, or you're preparing and you feel that your self study is not really helping you, then what you can do is you can take up our course. So let me show you. What you need to do is you need to go onto our website, that is www.adda247.com. Just have to go onto this area, and then we have the area of JIB and CIB. You have to go onto the area of JIB and CIB Mahapack. At this point of time, you can purchase the Mahapack for double validity. You can use the code MOON80 and get the maximum discount. So kindly go ahead and check it out on our website or in our app for further details. Along with that, don't forget, if you're looking forward to it, you can also take up only JIB as well. What you can do is you can open up the JAIIB October 2023, and this is where you will find the Mahapack. Only the JAIIB Mahapack, only the classes for separate subjects is also there, and the combined subjects are also there. The plus point of Mahapack is you can not only get the classes for the class subject there, but you also get classes for the revision batch. You also get mock test papers, you also get practice papers, mega marathon, mini marathon, doubt sessions, and a lot more things if you're looking forward towards the Mahapack. So it has a wider range of variety for you to look forward to in terms of the examination. So if you're looking forward to it, all you need to do is you need to click on the area of our website, that is www.adda247, and you will be able to get all the answers there. So if you're looking forward to it, then kindly go ahead and check it out.